We're talking about Strategy and BlackRock, two companies that dominate the Bitcoin headlines.
They manage as much money as the economy of Germany. I think it's like $11 trillion or something under management. Like, it's an absurd number.
MicroStrategy, 568,000 Bitcoin. BlackRock, 625,000 Bitcoin. If someone is going to vie to own the most Bitcoin, it might be either BlackRock or MicroStrategy.
You'd hear people say, oh, Larry Fink's an idiot, he's not into Bitcoin. I was saying, hold on. The questions I heard and the things they're asking about are not elementary. These guys know what they're doing.
Do you think that they can own more Bitcoin?
I don't think BlackRock wants to sit there and die, so they have to accumulate Bitcoins.
What does the Bitcoin bank of the future look like? And is MicroStrategy the BlackRock? Could BlackRock become Strategy?
The only obstacle I would see in the case of BlackRock is
Permissionless, the crypto industry's leading developer conference, is coming to Brooklyn this June 24th to the 26th. And this time, Bitcoin is showing up in a big way. That's right. With confidence in Ethereum and Solana on the decline, interest in Bitcoin development is riding high. And yet the way forward for many builders remains unclear. Layer 2s, meta protocols, soft fork upgrades. We'll be talking about the future of Bitcoin and how and if it needs to change. Of course, tickets are going fast. You can get them today at blockworks.co. We'll see you there. Nothing said on Supply Shock is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the company's funds or projects discussed. Hey everybody, welcome to Supply Shock. It's Pete Rizzo, the Bitcoin historian, your host today, once again with special guest Nolan Bauerle. You know him and love him from Roxham TV, or he's there talking about Bitcoin. Today, a special presentation for you today. We're going to get into two of the juggernauts that are competing to own the future of Bitcoin. This episode, we're talking about Strategy and BlackRock, two companies that dominate the Bitcoin headlines, have been dominating the headlines for years, but have very different visions for how the Bitcoin future will take place. So Nolan, excited to chat with you about this.
I've actually thought about this a lot. So it's a coincidence that I'm your guest to talk about this, but this is the kind of stuff I love.
Well, let's get into the broad strokes here. So I want to set the presentation for this podcast by just defining a little bit about each company. And if you're not familiar, of course, Strategy, dominated by Michael Saylor's vision to take what was a conventional software startup that was founded in the 1990s and reimagine it as a Bitcoin company, but specifically as a Bitcoin treasury company. So you've heard this term recently, a Bitcoin treasury company, a BTC. What is it? It's based on this Michael Saylor idea that companies should acquire as much Bitcoin as possible. And since 2020, Michael has done just that. He now owns 568,000 Bitcoin. Projections put estimates that if he keeps buying, it could go up to 800 or even 800,000 or even 1 million by the end of the decade. Primarily, he's using stock sales and convertible bonds to essentially issue debt and buy this Bitcoin. His famous quote, if you want to make money, buy Bitcoin. If you want to make more money, buy it with someone else's money. And if you want to make the most money, buy it with leverage. His latest purchase, 1.35 billion in May 2025. So his purchases have really escalated. Anything we should add there, Nolan, on MicroStrategy?
No, and I love the quote. He's been talking about that for a while now, and buying Bitcoin with someone else's money and leverage does look like the secret sauce.
BlackRock, the next contender, helmed by Larry Fink, also owner, operator, CEO, founder. BlackRock, known for the iShares Bitcoin Trust. So this is an exchange-traded product. It's a regulated financial product that gives access to institutions and consumers to buying Bitcoin. The fund so far amassed 625,000 Bitcoin. So again, going to those numbers, 625,000 Bitcoin to Michael Saylor's 560,000 Bitcoin. Of course, remember, there's only 21 million Bitcoin. But essentially, BlackRock entering the industry in 2024, right, attracting mainstream investors with the ETF, institutional investors sidelined for years, really unable to kind of get a vehicle that they were able to allocate capital to. Larry Fink comes in, changes all of that with a few CNBC sessions where he talks about encouraging clients to take a 1% to 2% portfolio allocation, But BlackRock expanding, right, wants to go into Ethereum and other crypto ETFs, has launched those products and really has its sights set on the entirety of the industry. So if our question is who will own the most Bitcoin, that's what we'll be exploring. They are certainly going into other aspects of the crypto space to do that. Nolan, anything to add here on BlackRock?
Other than we used to, one of the things that I knew about BlackRock getting into this, because our old office at CoinDesk was very close to the BlackRock offices. And I was called in there a few times just to give, what's going on, answer some questions and all that. And I knew right away something was up because of the sophistication of the questions. When I went into their offices in 2017 and 2018, and you'd hear people say, oh, Larry Fink's an idiot, he's not into Bitcoin. I was saying, hold on. The questions I heard and the things they're asking about are not elementary. These guys know what they're doing. And
yeah, now that you mention it, I actually do remember talking to someone from BlackRock in 2015 around the time of the DAO hack. And I remember the quote that I gave them is that this will be the stupidest industry until it's not. Which I think has lived up pretty well. So again, let's look at the numbers. MicroStrategy, 568,000 Bitcoin. BlackRock, 625,000 Bitcoin. I think we're going to examine in this episode is just who's going to end up with more Bitcoin. And so this is a bit of a speculative conversation. We're going to kind of look at the aspects of each business, kind of ask some questions around that. And again, this question, there's only 21 million Bitcoin. Eric Trump out there talking about this global race, right? I think if the word is out now that Bitcoin is perhaps the most valuable substance on earth. So here we have perhaps the two institutions that if someone is going to vie to own the most Bitcoin, it might be either BlackRock or MicroStrategy. So maybe we can talk a little bit about the funding of their Bitcoin acquisition, right? Maybe there's a difference here for people to understand, right? So in MicroStrategy, this is a traditional software company based in Virginia. They're primarily issuing debt, equity offerings, convertible bonds. BlackRock, ETF inflows and institutional capital. So two very different looking companies in terms of the products and services that they offer, as well as the customers that they catered to. But really, maybe we can start with that question, Nolan, in terms of how these companies make money as traditional companies that are selling products and services. Are they competing for the same buyer, right? So I guess in terms of how they fund their Bitcoin acquisition, is it the same kind of activities? Is it the same people helping them do it?
From 40,000 feet, they're the same in the sense that it's people who just want to increase their wealth and they want to invest in something and they want it to grow. So at that level, everyone's in agreement. It's the same.
Right. I think maybe to make the question more real, if I'm going to buy a share of Master and I'm going to buy a share of iBit, is there an actual competition between those two companies for this end buyer?
Well, absolutely. Because what happens when you get the BlackRock ETF, you're just getting sort of a spot benchmark type of paper Bitcoin. Now, it's not that it's not paper Bitcoin over at MicroStrategy or Strategy, but what's going on over there is you're going to get a premium. Because the idea that when we're talking about, like you said, 800,000 Bitcoin or 500,000 Bitcoin, that you could just multiply 500,000 Bitcoin by the spot price, and then that's how much it costs to acquire 500,000 Bitcoin is not true. There's a premium to acquire that much because of what you get from leverage, which is exactly their vehicle to go ahead and buy more. So there is a cost. That's why the premium exists, because what you're getting with that premium is this leverage ability to go out and buy more. Now, what happens at BlackRock is this is just simple AUM, right? Assets under management. People give them a ton of money and they allocate according to what both their advisors and their customers, the people giving them the money, want to do. And so you are getting a pretty closely tracked, benchmarked spot market price for Bitcoin. You're not having to pay more, but you can actually grow the whole thing because of the size of the stack. Michael Saylor is able to take the size of the stack and treat it as one asset, which they're able to borrow off of and then go out and buy more Bitcoin. So from that point of view, it's different.
There's kind of the same kind of a dynamic here, right? Both companies are acquiring a pool of Bitcoin, and then essentially you're buying some exposure to it via a share. Is that really true? Or are these apples to apples?
Well, hold on, because it's the same way that when you walk in the door, right, with MicroStrategy, you're only presented with one choice. So now you got to go beyond the business and actually look at the characters involved here. everyone after that MicroStrategy event we saw last week in Orlando, everybody making the comparison to Warren Buffett. He's the Warren Buffett. This is the Berkshire Hathaway of the new market. Now you got to understand what that means. The Berkshire Hathaway in the 1990s was the guy who told you not to give money to Larry Fink and all those people, because when you go in the door there, what they're doing is they show you everything under the sun, and they want you to go with the advisors. They want you to go with the more bespoke service. They want to get you into the 2 and 20, they call it, right? So when they are able to take 20% of what you make and 2% fees to manage your money every year. Now, they didn't do that with the IBIT because that was all about getting market share from Barry Silbert and Grayscale. So like typical drug dealers, they'll drop the price to nothing, wipe out the market, and then take over the market after, then add the fees. I know for a fact that DCG was very surprised about how aggressive Larry Fink was in this. They basically just said, we're not going to charge how we make money normally for this product. So what's going on, and the main difference was for many years, you had Warren Buffett who told everyone who was listening, and this is why the Warren Buffett Berkshire Hathaway annual meeting was such a big deal, because he's pumping up all those people to say, you don't need a financial advisor. Go buy the market. Go buy a mutual fund. Go buy an index that just touches on everything, and keep it simple. So Warren Buffett, just like Michael Saylor, has been promoting this idea that you don't need to use all your IQ in order to participate in the markets. You don't need to be able to tell the difference between this stock. Because picking, like, let's be honest, and this is what I believe, and I think Michael Saylor believes this, and this is something that Warren Buffett said many times. Stock picking is a fake job. It's not a real thing. I mean, people are paid to go be stock pickers, but nobody's good at it. No one knows. It's like picking a cryptocurrency. Who the hell knows? No one can tell. You don't know from one morning to the next what's any good. And you can look at this stuff for years and not know, right? Because it's hard to tell. So when you go into BlackRock, it's sort of a Costco of opportunities. It's almost like you have choice. You'll be overwhelmed by the choices. You know, when people come to me in Bitcoin and they're new and they say, well, I don't know what to do, I'll always guide them to something like Cash App, because they're not going to be confused by choices. I say, go there. They're not going to try and sell you anything else. They just have Bitcoin. And Michael Saylor is presenting a very similar idea. He's telling his world, you just need to buy and hold Bitcoin. It's a very simple message. That's what resonates so similarly with the Warren Buffett argument. And it's exactly why everyone made those comparisons. The Berkshire Hathaway vehicle promoted a sort of anti-establishment approach to growing your wealth. They went against the BlackRocks. They went against this illusion of choice in order to participate in the market. Now, it's true, but that's one of the things that Bitcoin promises to change. You know, the best and brightest always go into the job that pays the best. And we had a whole generation of the best and brightest going into financial engineering. And that's why BlackRock they hired them all, right? These are the guys that went out and did all the education. And that's a good thing. You know, BlackRock's supplying those high-level financial advisors. They're some of the best teachers in the world. These are some of the most capable people in the world because they get paid a lot of money. So now they're going to go out and also try and sell you this and that. So be careful. You're dealing with very, very, very skilled salesmen. Whereas you've got Michael Saylor, who's just going to do the Warren Buffett thing and say, you know, be good at what you do, go make money. And when you want to save it and grow your wealth, just buy this one thing and don't confuse yourself.
Well, let's get into the people here, because I think you brought up an interesting point. These are two companies helmed by sort of visionary founders, BlackRock, MicroStrategy. MicroStrategy founded in 1989. In the 90s, you know, Saylor really kind of, in some ways, recognizing digital scarcity and just this idea that the internet would upend commerce. There's a great article on Blockworks by David Canellis for the Supply Shock newsletter that really goes into the early history of Michael Saylor, and he was a big domain name investor, right? So someone who scooped up angel.com, alarm.com, hope.com, which he's using for his Bitcoin services. You know, he estimates that he spent, you know, as much as $2 million in domain names, which is pretty impressive. But, you know, later sold them for a lot of money, right? Alarm.com sold for about 30 million, angel.com sold for about 110 million. But it was actually the voice.com sale that actually got Michael Saylor into Bitcoin. So there's a famous story that that was acquired by a cryptocurrency startup called EOS, famous for its never-ending ICO, year-long initial coin offering, where, you know, they wanted to launch a blockchain phone and they were looking for a premium domain. lo and behold, the folks at EOS, perhaps even Brandon Blummer, end up reaching out to a Florida billionaire named Michael Saylor, who's at the nadir of his career in terms of having a software company that's been around, been successful, not part of the S&P 500, not mainstream. Maybe thinks as he said that his career is over. Lo and behold, he sells this domain to Block One in 2019 for $30 million. And this really starts the unwinding of his skepticism, right? He's Michael Saylor has a couple famous tweets from the end of 2013 talking about how Bitcoin would go the way of online gambling, eventually be sort of shuttered by governments. But in 2019, Saylor is sparked by this domain sale to get back in, right? Who are these young kids doing what with cryptocurrency? He goes down the Bitcoin rabbit hole and really, finds inspiration in the Bitcoin writing community and bloggers who were writing that around that time about why Bitcoin was so special, why it was so scarce, the difference between a project that was abandoned by its lead developer and is run by a community versus the kind of VC led projects. He talks about this as a light bulb moment, but really, a lot of Saylor's theses are shaped at this time. And of course, in 2020, it's not until August of 2020 that he comes out and purchases his first Bitcoin. But at that time, he wasn't even using debt, right? This was just kind of
Cash flow.
profit
Yeah.
from the company, right?
Yeah. Cash flow.
Right. So comes up with this idea, but really hasn't perfected it, right? And it is over the course of the next 4 years that we'll see Saylor kind of take this idea. So maybe we could speak now to the evolution, right? So Saylor kind of, he knows that he's got to buy Bitcoin. He wants to buy as much as possible. He buys personally, right? He talks about how he bought 17,000 Bitcoin or owned something like that on his personal, maybe even more now. But then he started buying with the company. So what? Maybe Nolan, you can take us in. What happens from this first purchase in 2020?
There's one important thing, and this is where there's a bit of an overlap with BlackRock and the MicroStrategy approach. But what I think the result of this overlap is, which is regulatory manipulation, let's call it, getting your way with the regulators. That was his first obstacle, and I'll explain it in a second. But one of the repercussions of that is, I think, to answer your original question, that MicroStrategy will be able to stack more than BlackRock for this reason, and it's simple. He had one job to do, which was Bitcoin was sort of prejudiced for tax reasons. Normally, with equities in the United States, when you file, you have this real big discretion about which price you bought the asset at and which one you sold and at what time, and so you're able to manage your unrealized gains or unrealized losses when it comes time to file these balance sheet tax things at the end of the year. I don't quite know how to explain it, but I know this was one of his main missions when he started, and he won that fight. He won the ability for Bitcoin to that people who put it on the balance sheet would have the same discretion as individuals when they buy a stock and sell a stock, and which one was sold at what price and which one did you buy at this price. So what it comes down to is it gives you the discretion to say, I sold this Bitcoin, but it's actually one that I bought at a huge premium. Like, this is the one that I bought at the top, and now I'm going to sell it. The one that I sold is actually the one I bought at the top. So you're allowed in the US tax code to have this discretion about which one you sold, and you can choose the one that's better for you. So if it's a loss, it's better for your taxes. And he had to fight for this to be applied to the corporate balance sheet for Bitcoin. And this because it wasn't obvious at first. It looked like they had to go with a calculation that would not favor keeping Bitcoin in the balance sheet. So once he won that, he doesn't have to look at regulation again. BlackRock's game is a little different. You got BlackRock, who's got to go down and help Trump buy the Panama Canal. It's got to go, because it's managing all kinds of money for all kinds of people. It has many masters over at BlackRock. They manage as much money as the economy of Germany. I think it's like $11 trillion or something under management. Like, it's an absurd number. But with that comes all the responsibility tied to these many masters. That's why they have to have so many products to sell. That's why they have to have so many things to offer. It's a very complicated organization. And if they don't have that ability to get into the regulator's ear and change things, I mean, just think about what Larry Fink did before he tried to get into Bitcoin, before he got into Bitcoin. He was the brains behind all of this regulatory change towards ESG. He was going to tell all of Wall Street that they had to factor in environmental and social governance to being able to participate in the stock market. It was insane. The amount of burden, the amount of overhead that was going to require to just participate in the markets is now the exact opposite direction of what Warren Buffett wanted. This was turning those stock pickers into almost like engineers, where they had to really, really craft products for people that satisfy the environmental and social governance type formulas that they were after. Whereas you just had Michael Saylor, who had one regulatory fight in his whole life, and he never has to go there again. He went to the Bitcoin balance strategic reserve thing with the president, but that's a cocktail party for him. He had nothing to really achieve there other than networking. There was no real regulatory goal other than it would be great for the US to behave like his own company, it would be a great signal. So he was there on sort of a peace mission. Whereas you've got Larry Fink. If he has to go get the Panama Canal, he's got to go get it from China. He's got to do all kinds of things. This is a huge, huge, huge organization that wants complexity in the market. It wants to be involved in all the regulatory burdens. And that's a huge difference.
But ultimately, we've got a traditional financial company, diversified products, diversified fees, and MicroStrategy, which is a software company that's betting on Bitcoin, but really hasn't made the pivot to being a Bitcoin company yet. So maybe we can take the question now.
They're also trading off their own books, right? So they do it for their customers, but they have their own balance sheet. So they're also, you don't even know if they're in conflict. They don't have to do any of that. They're allowed to trade from their own book. They're allowed to trade with their partner's money. Now, I don't know what's untoward in there. I don't know who's looking. I don't know who's watching the watchman in this case, but they have all kinds of access to do this kind of stuff. Whereas with Michael Saylor, you kind of know what he's going to do. He's not really hiding anything, right? It's very transparent, very simple and easy to understand thing, a lot like Warren Buffett.
Well, I think one of the things I wanted to explore in this podcast was this idea of, could BlackRock become strategy? Could they adopt that?
This is what I mean. I don't think so because of those many masters.
In the spirit of Michael Saylor, given that he's outsourced a lot of his strategy behind his products to AI, right, coming out of the conference last week and saying that he, Strife and Strike were kind of the first AI manufactured products, where he built and tested those. We put to the AI, what are all the ways BlackRock could buy BTC? So we'll go through the ways, kind of looking at some of the strategies that they discussed and sort of the limits and the calculations based on the available data. Because I think one of the interesting things here is that, and you've talked about this, right? Michael Saylor has this tremendous lead. There's this idea that he has, all this Bitcoin now. Other people are waking up. Larry Fink, I think, someone who's competitive, but has immense resources, right? So maybe what we can underscore in this conversation is MicroStrategy has a great idea, but in some ways limited on the resource side, right? A lot of the company isn't focused on Bitcoin. It has to kind of keep the core of the business, which is enterprise software and consulting, going, and maybe hasn't become the Bitcoin business yet. Obviously, that's the opportunity that Jack Mallers sees with 21 Capital to kind of build Bitcoin products and kind of put them to market, right? Kind of align those two things, right? Have a product that is Bitcoin focused and earning revenue with the strategy of accumulating as much Bitcoin as possible. But okay, so we'll look at some of the key financials for BlackRock. So BlackRock right now managing 11 trillion, right? So several orders of magnitude larger than the entirety of the crypto market. The entire crypto market right now.
Most countries.
Yeah, the entire crypto market now about 3.5 trillion, maybe 4 trillion on a good day. So BlackRock, 3 times that, and so that's its own total assets. It's projected that BlackRock owns about $140 billion of capital, just that it controls. Its annual income $6.4 billion. And so, 6.4 billion put against the Bitcoin price. The Bitcoin price is still only $100,000. So if you want to know why Michael Saylor is coming out with these sky high predictions, this is one of these imbalances that he's talking about. The income that BlackRock is making alone, 6.4 billion, needs to be reinvested. Of course, BlackRock does not own Bitcoin directly today. It is just letting clients buy it through the ETF product. But again, the thought process here is, here's the resources that Larry Fink would have at his disposal if, again, if this were to happen, though, incentives kind of align and dictate this theory. So, okay, so the first thing they could do is they could do direct balance sheet purchases, both with BlackRock Incorporated or the subsidiaries. Of course, there's sort of a maximum theoretical limit, right, to that. BlackRock could just, with all this revenue, decide to push this into Bitcoin. Obviously, that's not happening. MicroStrategy is not even doing that. And then there's the practical limit, right, which is that companies rarely deploy more than a fraction of their assets, right? So MicroStrategy, again, kind of relying on debt and revenue to purchase their asset, but not spinning profits over completely. So again, a little bit of a difference there. But I think this is again based on the projections of AI. So if BlackRock used 10% of its total assets, so going back to that trillion, $11 trillion number, 10% of its total assets would be 139 billion. Essentially what you would be looking at, if they were to allocate that to Bitcoin, is they could buy 139,000 Bitcoin. So, that's right now, if they use sort of a conservative 10% of their assets, rolled it over to Bitcoin, it's 139,000. So right there puts you about a sixth of what Michael Saylor has acquired over the course of 4 years, maybe in a second. Can turn it on. Obviously, as you said earlier, the Bitcoin price doesn't work like that. Fortunately, you can't go out and get 139,000 Bitcoin on the spot market. Completely unrealistic. They would move up the price if they were to do that. Of course, maybe they're accumulating in the shadows. We don't know. But a simple calculation there. 139 billion. Well, actually, sorry, it's a little bit higher. It's 139 billion divided by 100,000 is 1.3 million Bitcoin, so a bit over a Satoshi. So okay, so if they're able to use the profits, BlackRock, even if they were to use a percentage of their profits, could end up with 1.3 million Bitcoin. Obviously, it's not realistic, right? You would agree?
Yeah, no, not even close.
Okay, so then maybe we can take the mindset of obviously the MicroStrategy using a portion of its treasury. One of the things that MicroStrategy got over was this idea of their board, right? So sort of convincing their board and investors of this strategy. So BlackRock would probably also face shareholder resistance. So one of the things that they would be a barrier to this is that they would have to go and do the corporate work. So maybe you can speak a little bit to what that would be like.
Well, that's a big problem because you said everything about voice, and then he starts going on the podcast and the writing. Michael Saylor dove deep into Bitcoin culture right away. And he talks about how Samson Mow, for example, came out and showed him how to tweet and go on TV and then get involved with the Cyber Hornets. Remember the Cyber Hornets when he was all excited about the Cyber Hornets? Now, what all this speaks to is what you see with Lynn Alden every day or with Willy Woo an era ago. And it's diametrically opposed to BlackRock, and that is that most of Wall Street is built off of information asymmetry. It always was. Since the beginning of Wall Street, it was, what do I know more than the other person? And I'm going to make money off of that edge. The delta between what you know and what they don't know is the lifeblood of Wall Street as we've known it. Now, Bitcoin really threw a wrench into that whole relationship. And what we see from people like Lynn Alden or Willy Woo were people willing to share their information liberally with the whole world. And you see Michael Saylor do that all the time. It's proof of work. It's show your work, a subform of proof of work, right? So Michael Saylor shows his work, and everyone in that world shows their work. Now, if you're asking BlackRock to come out and show its work, it ain't gonna work. That's the last thing they can do. They're not built to show their work. They're built to hide their work. They're built to make sure that what they're doing is different. It's got the edge. They're a little bit ahead. They're typical Wall Street in that way. They live off of asymmetric information advantage. And for them so it's not even about the Bitcoin at that point. If you're going into BlackRock and you're going to all those shareholders and you're going to the board and you're saying, you know what, I got an idea. Let's just open source what we're doing at BlackRock. And that's not going to work. That would be like Apple saying we're going to open source.
Yeah, and again, that's what makes some of these projections unlikely, right? So you take the 1% of the AUM, if it went into Bitcoin, it would be 1.1 million Bitcoin. That's what makes it unlikely that would ever happen, because essentially, you'd have to go through this process. But also interesting to note that BlackRock could go out and also start acquiring its own ETF. I'm correct about that, right?
And they might. I mean, I don't. If people would know that how they're controlled with trading their own book versus what they're managing, I think is one of those information asymmetry things. I think you just kind of hope they don't. I mean, if you look at exchanges, for example, they do that kind of thing all the time. I mean, that's what all kinds of crypto exchanges get in trouble with. They're always trading their own. That was BitMEX's big problem, if you remember, that they got all kinds of trouble. You can't do that, right? It's not. A lot of people don't like to see that. So I don't know anything about what's going on under the hood at BlackRock. I don't look at their earnings reports, or I don't even know how the company is structured really above that. But what I do know is that we have no way to tell if they're doing something like trading their own book versus their customers. That's my understanding. Whereas MicroStrategy has this really transparent, accessible, easy approach. You don't really have to look too far to see everything. And all he does is report on it and say what he's got and what he's acquired at and what his average acquisition price is. And so it's a very simple, easy thing to understand. And it's in the lines of this transparency that I think is very welcome by Bitcoiners, and I think is practiced by Bitcoiners, and is a part of our information network that we've created. And that's something he's tapped into. BlackRock is going to have a lot more trouble accessing that, because that's what you'd need to convince the whole company to do this. You'd have to have exactly what Michael Saylor brought. Michael Saylor brought those cyber hornets into the boardroom at MicroStrategy and just let them pick the whole thing apart.
There's also the idea that, there could be BlackRock, in all fairness, could launch additional products. You could have something like a private trust. You could have managed portfolios for pensions, endowments, mutual funds.
Yeah, and they're doing that. But that goes back to the AUM stuff, right? They don't care what you buy. They just want you to buy something. And they look stupid if they don't have a good menu when you come to buy stuff, because they've already talked you into giving your money to them to manage it. And that's exactly what Michael Saylor and Warren Buffett said don't do. So once they have the money, you're in the restaurant, you're going to want to see a menu. And so that's where they're making their money. So of course they're going to come up with a ton of products. I mean, they have to. That's what they do. It is a menu of products they want to offer all the time. Michael Saylor has, it's more like a steak restaurant, right? There's steak, and then there's some more steak, and there's different cuts of steak, but it's a steakhouse, right? There's even if you go to the Yield Max product, it's just a little more on the edge of what they're already offering. It's all within the same range of products. It's not asking too much more of your attention or your interest, or you're still being sold within that same frame. Whereas BlackRock, I mean, it's everything under the sun. I don't think there's anything evil about that.
Well, one more thing about BlackRock that I would say is that today it's a global company, right? So contrast that to MicroStrategy, which is U.S. based. It's selling, enterprise services. In some cases, has government contracts as well. The headquarters there being in Virginia. So there's international subsidiaries that BlackRock has in Europe and Asia. BlackRock obviously going to be launching IBIT in Europe and in the UK, has kind of advertised that soon. So additional revenue streams. What about hypothetically, let's just say, I mentioned these managed funds, these pensions, these mutual funds, these subsidiaries. Maybe they put a fraction of that profit into Bitcoin if the demand, for Bitcoin became enough. I mean, you start to get this picture that BlackRock just has a tremendous amount of resources, and if they wanted to save in Bitcoin and sort of grow Bitcoin, you could see that it could quickly escalate to a level that maybe MicroStrategy wouldn't be able to.
And their internationalness, I think, lends towards that. If you saw the Arthur Hayes article that he just published about how all this stuff is going to shake out with capital controls in particular, he starts talking about how we've taken for granted this generation that we lived through where the whole world could access US products. And so even though there would be trade imbalances, the current account balance in the US was positive, because in general, if you were a Chinese manufacturer and you made all this US dollar selling toys, in his case, he talked about He-Man in the article today, He-Man toys, you had a bunch of US dollars from selling to American kids. And so what did you do? Did you bring it back to China and buy renminbi with it? No, you bought US T-bills and you put the money to work in America, and everybody in the world had a right to do that. Now, there's a lot of people who believe that Besant and all kinds of folks are going to change that so that if you are a foreigner and you want to have access to American products like the IBIT ETF traded on the New York Stock Exchange, you're going to have to go down one of these extra taxation routes. And that capital controls are coming so that what happens is any neutral asset like Bitcoin is going to shine in this environment just because we saw the Trump administration didn't tariff gold. It's the same idea. There is a sinew and connectivity between these international markets. That's why you've got someone like Larry Fink going out there talking about the need to hedge against government capriciousness and governments having just a whim of changing things. And so if you don't have that flexibility, if you don't have a place to go to, he's calling it all the time a safe haven asset for that reason, he's going to be having to give this advice everywhere now, because indeed we are entering a kind of balkanization of who has access to US markets and who doesn't. And they're going to be one of the main connectors of all of that stuff. That's going to be their job, helping foreign clients have a strong relationship with the US administration. So, for example, people keep talking about this Mar-a-Lago Pact or the Mar-a-Lago Accord or the Mar-a-Lago Agreement. And it's going to look something like what we just saw with the Trump trip over to the Middle East, where you buy the American security products, you buy the Raytheon stuff, you buy the bombs, you buy the stuff, the drones, whatever it is they're selling. Then you get access to American markets at a lower tax rate, maybe. If you invest in America, you get more access. It's not just going to be the free-for-all that it was a generation ago. And folks like BlackRock, this is sophisticated stuff. Part of their market is dealing with sovereigns. I mean, they are the bankers of a lot of these sovereigns. And so you're going to start to see they're going to embrace Bitcoin for that reason, and they're going to have to. But that doesn't mean they're acquiring it for themselves. They're still acquiring it on behalf of these large sovereigns. And I think I just saw today, it was just announced, Saudi Arabia been buying the IBIT like crazy. They bought MicroStrategy too.
Well, Saudi Arabia was that was master, so they have MicroStrategy.
Oh, pardon me. Yeah. Sorry, they did not buy the.
So in this case, already proving the point that a sovereign fund using MicroStrategy to get that exposure. But I think the key point here is that BlackRock, if they did direct on the balance sheet buying, it would likely be limited to tens or even hundreds of thousands of Bitcoin at most, right? Maybe
so.
Let's just say
Yeah.
a ballpark, 100 or 200,000 coins, still maybe only half of what MicroStrategy, has acquired. And that's not because of maybe the intent. If Larry Fink wanted to go, in the words of triple maxi, he has a lot at his disposal. It's just you wonder how much that machine can really, move and adapt.
Exactly.
Right?
Exactly. Michael Saylor has not been distracted by the U.S. president calling him to tell him to buy the Panama Canal and boot the Hong Kong and Chinese out of there. Nobody called Michael Saylor to do that. Right? They called Larry Fink to do that, and Larry Fink did it. And Larry Fink has to do a lot to make sure he's always ingratiated with the administration. Michael Saylor doesn't really have to. He's not selling a product that requires a ton of American help. It's great. The strategic reserve is a big help to him. Sure. Of course he loves it. Of course he's going to go and have a picture with the president at the White House. Why not? Right? But he's playing a completely different game, and he doesn't have all these masters to serve. There's no way BlackRock can keep its position. It would have to change its character and stop being all things to all people and all governments and all sovereigns in order to focus on Bitcoin. And they're sort of the last one to do that because they're doing great. Just like you said, they're doing great. They're making a ton of money.
Let's maybe in this last or next kind of chapter focus on, there's this idea that, so why would BlackRock want to be more like MicroStrategy? And I think the answer to that is MicroStrategy in a Bitcoin economy, where Bitcoin is a large and meaningful part of the global economy, has the ability likely to offer a lot of the same services that BlackRock currently does, right? To kind of create these different types of managed products to actually, facilitate the lending markets and be a bank. So what about this idea, Jack Mallers just talked about this, the 21 Capital. Yeah, what does the Bitcoin bank of the future look like? And is MicroStrategy the BlackRock?
Yeah, it looks a little bit like BlackRock, not so much in the products, in the services more like it. Like what we have been confused about with banking, with fractional reserve banking and just the nature of it and what happened at the commercial level for normal people was the commercial banks were really just interested in the subscriber revenue. And I call it subscriber revenue. That's not true. It's mortgages. It's just a guaranteed 30-year customer. And they love that. That's a very simple product. That's basically all they offer when it comes to just normal commercial banking, normal clients. You go over to the private banking world and you see what a real bank is supposed to do. It's supposed to be capital introduction, prime brokerage. There's all these services that go into private banking that we've never had a hint of, a whiff of in normal commercial banking in 80, 90 years. And so a Bitcoin bank looks a lot like BlackRock in terms of services, not necessarily products, because those commercial banks with the normal people with the houses, it's not really their intent to make you wealthier. They're telling you buying a house is going to make you wealthier, and it has. They did a great job for a lot of the boomers. They did great on real estate. But as we all know in Bitcoin, that's a failure of the dollar itself, and it forced everyone into this risk curve and into the sophisticated act of buying houses, picking neighborhoods, and going into real estate speculation. And so, yeah, it's a total different, it's a different outlook entirely. And if they would, recalibrate at BlackRock to try to become what essentially 21 or MicroStrategy or Kraken Bank, that was the vision over there as well. You get a bunch of Bitcoin. And in the old days, before fractional reserve Bitcoin, how much money you had in your reserves, proof of reserves, how much money you had was the strength of your bank. How much money you actually had was how strong of a bank you were. Because you need that money to be able to lend to people. You hear all these crazy ideas that Saifedean has, for example, on lending. A lot of it comes from this model of having enough Bitcoin to be able to enter these credit markets and be able to give people loans and rehypothecate the Bitcoin. But you still have to have the stack, just like banks before fractional reserve banking was invented and the Federal Reserve came on the scene. Once the Federal Reserve came on the scene, it's kind of dumbed down the commercial banking business models so that they just want these long-term subscribers. It worked for a while. It was a great idea for a lot of people. But it's coming back to the point now where you're trying to grow your wealth and you need services like capital introduction. I need to know a bunch of rich people. I need to know a bunch of people with Bitcoin. So now you see all these Saylor copycats, and that's the exact game they're playing. They're going to people like MicroStrategy. They're saying, hey, I need to meet some investors. I need people to post their Bitcoin with me. I need people to invest their Bitcoin in this company so we have more under management, so we can offer more services. We can get that premium up and we can get the stock price up so we can borrow more money and get more Bitcoin. And so when you see these proto-Bitcoin banks, that's exactly what they're going to do. They're going to look a lot like the care and attention that BlackRock offered their customers, which was great care and great attention and great wealth building. And they did a lot of stuff and they offered a million things. You're going to be able to do all that stuff at the commercial level for normal people and do it in Bitcoin. And so it looks like BlackRock in the end, except they're not going to confuse you with a million assets and all kinds of other stuff. It's going to be pretty simple.
I think maybe the TLDR is BlackRock has turned, access into assets under management, right? They're accessing a client that helps them kind of grow. MicroStrategy really could turn their Bitcoin ownership into an infrastructure that people could access.
Yeah, that's the perfect way of putting it. That's exactly the perfect way of putting it. Yeah, that's exactly it. They'll have this ability to leverage the Bitcoin and turn it into services, which will bring people in the door, and it will completely change how we think of banking as a wealth management system, a wealth growing system, not so much a place where you beg for a loan and maybe they give it to you.
Of course, a lot about the world needs to change as well in the meantime there. But fascinating subject to think about how MicroStrategy could become the BlackRock, how BlackRock have to become the MicroStrategy. And we might be headed towards a future where both of these institutions have an opportunity to be the largest owners of Bitcoin. And maybe we can kind of do a final thoughts here. The chances that you think Strategy and BlackRock both own over 1 million Bitcoin in the future, I would say that I think that situation is pretty high and pretty likely.
Yeah, me too. I won't disagree with you on that. I think the only obstacle I would see in the case of BlackRock is getting the pivot, right? They've got to change their worldview. They're coming to it. They're changing their worldview. You see them offer. People say they're saying no, go 5% in Bitcoin to the sovereigns they serve in foreign countries. And they're becoming really clear on the need to have a hedge against government stupidity and government foolishness. And because they know, I think anyway, they can tell there is a type of fiat apocalypse that's growing and it doesn't look like there's a way out of it. And if you talk to anyone out there, we all see it, right? The 37, $38 trillion in debt, some crazy number that can never be paid off. And so what do you do with that, right? And I don't think BlackRock wants to sit there and die, so they have to accumulate Bitcoins. And
But it's do you think that they can own more Bitcoin, right? Now, with everything that you know, with how much MicroStrategy has acquired, this 5-year head start they've had on the market, BlackRock has all these resources, maybe second to the US government, right? If maybe that's the only other player, I would say, at this point.
think of it, it's almost like, let's go religious. It's like, what are the benefits of monotheism? And in the case of Michael Saylor, he serves Lord Satoshi, and it's a very simple arrangement. He doesn't have anything else to think of. BlackRock has a million masters in this fiat apocalypse, this government and that government. Everybody's their boss. They're like the gig economy of bankers. They got to, I'm your banker, I'm your banker. And that's very complicated. Like I said, the Hong Kong thing is just an example. Who knows what else they have to go out and finance on the behalf of sovereigns all the time? I mean, they literally were told, go buy the Panama Canal. And so, I mean, it's a great, good for them. It was a great purchase. It was, I'm happy they did it. It's awesome. But they've signed up for this, and they didn't sign up for what Michael Saylor signed up, which is just, I want to buy Bitcoin. I want to buy Bitcoin. I want to buy Bitcoin. And so they're just playing a different game. If they come to a point where the fiat apocalypse burns them so bad, they don't want to deal with sovereigns, all the pension funds are bust, they don't care about governments anymore, yeah, I expect they go absolutely psycho into Bitcoin and become even crazier than Michael Saylor. I could see Larry Fink putting AI pictures about Bitcoin holding hands with your dreams and stuff like that every single day. If the fiat apocalypse happens and he's got craziness staring.
Is there another Wall Street or financial type institution that you think could rival MicroStrategy in terms of total Bitcoin ownership?
Wall Street that could rival, yeah. I think a lot of these. So it's not just the top level of these private banks like BlackRock or Goldman Sachs. These are the ones with the many masters. These are the ones that are caught up, and I think are going to be having to circle the drain with all the things that break in the fiat apocalypse. I mean, these are their customers, these are their clients, the people who want nothing to do with Bitcoin because they're so biased in another direction. Now you have a whole tier, and because Wall Street is all this ranking, it's very Confucian hierarchy, the biggest, Goldman and BlackRock and Jamie Dimon. It's very hierarchical. But there are 100 of these sort of, they call it off Broadway, right? Off Wall Street private banks that understand exactly what's going on. They see this as their biggest opportunity. And Michael Saylor, we can say it's a software company. It used to be a software company. Right now, it's really a Bitcoin holding company if you compare the balance sheet that it's acquired in Bitcoin versus what the actual software company does. And if it wasn't for the way he did it, it would be even hard to launch that kind of a company at this point because it really is just a Bitcoin holding company. That's why you have to reverse into these companies. So you got a lot of Wall Street people who've seen the problems and mistakes that Michael Saylor made, which is that his credit is only good when Bitcoin's up. And so he has trouble not buying the top. You look at his little thing with the orange that he paints.
Well, that's why I think with the BlackRock model is this idea that they have so many products and services that are profitable, right? There's probably no financial company that has as many profitable services as they offer.
Yeah, that's true. But they're all indexed to the overall market, right? And that market it prejudices certain stocks that aren't sexy. Whereas 21 or Semler, for example, Semler has been talking about the list that they have of the positive cash flow businesses that Wall Street and the BlackRocks look down on for whatever reason. If a company like Western Union, right, is acquired by one of these banks, Western Union, tons of cash. Why aren't they doing stable coins? Why aren't they doing crypto? It's just the most obvious play. They got a brand name. The stock's worth nothing. They have a ton of cash flow. If you go out and acquire something like Western Union and you have that brand name and you have that cash flow and you're just one of these little off Wall Street banks and you put together the $7 or $8 billion to buy Western Union, suddenly you've got a billion customers and you've got cash flow all day long, and doesn't matter when you can buy Bitcoin because you got stable coins coming out, you got all this stuff. So there are many, many routes by which people can pass Michael Saylor. I think Michael Saylor has done great. I think it'll be historic, but the cake is already baked, and it's going to be hard for them to compete against people who said, you should have put a little bit of chocolate sauce on there. Too late. I can put chocolate sauce.
Well, the other thing here that Michael Saylor has on his side is just the capped 21 million supply. Right? So
we all live in that world.
As these new entrants come in, let's just say you had several BlackRocks kind of competing to acquire, right? They are fighting for the remaining supply, and that forces the price up. You have to get sellers from somewhere, and yeah, it really is interesting. It does look like Michael Saylor's lead might be insurmountable. I'd say, over under on Michael Saylor being the largest owner of Bitcoin when all said is and done. I think he's looking like Vegas would give him some pretty good odds.
I'd say Vegas would give him great odds. He's so far ahead. It's a baseball game, and we're in the 5th inning, and he's up by 9 runs, starting pitchers out of the game. But we don't know about the bullpen, and I think you never know. You never know. Never say never. And I think that there's still enough routes to beat him. I'm not sure anyone will take them. But if I had, $7 billion or whatever right now, and I wanted to do a Saylor strategy, I'd buy someone like Western Union, and I'd ride that cash flow, I think, pretty quickly into more Bitcoin than Michael Saylor.
Who will own more Bitcoin, MicroStrategy, strategy, or BlackRock? This has been Supply Shock. We'll be looking forward to continuing the conversation at Permissionless in New York City in June, the 24th to the 26th. You can find myself. I'll be there showing up, talking to some great speakers. Just announced Peter Todd, famed Bitcoin core developer and creator of Open Timestamps, troublemaker of the Bitcoin internet, will be there doing a fireside chat with myself. Excited to see you there. Excited to chat about Bitcoin, and we will see you later. This has been Supply Shock, a Blockworks podcast.
I also want to get a plug-in for our stuff at Las Vegas. We're going to be in Las Vegas, and we're going to record Supply Shock on the expo floor in Las Vegas.
Correct.
Come see the Roxham TV booth, and we'll have Pete Rizzo there recording some great content. Come say hi.
We'll see you next time.